Greetings to all of you. Today we will solve and work out one problem on sale of partnership. A and B are partners having profit sharing ratio 2:1. Their balance sheet as on 31/3/2005 is given below. We have creditors, bills payable, reserve fund, A's loan account, capital account of A and B. Then we have cash, debtor less reserves, BR, stock, machinery. They agreed to sell the business to a limited company and the company to take over the assets and liabilities as follows. Machinery taken over at 48,000, stock at 1,05,000, debtor at 1,52,100, BR 15,000, goodwill 18,000. The company agreed to take over the creditors at 1,14,000 and bills payable at 30,000. The firm received 1,20,000 of the purchase price in 10 rupee fully paid equity shares and balance in cash. Distribute the shares as per original capital ratio. Prepare necessary ledger account in the books of the firm. A and B are partners sharing PL in the ratio of 2:1. So ಲಾಭನ ಯಾವ ರೀತಿ ಹಂಚ್ಕೊಂತಾರೆ ಅಂದ್ರೆ 2/3, 1/3. Creditors 1,20,000 transfer to credit side of realization account. BP 30,000 transfer to credit side of realization account. Reserve fund distribute to all partners in old ratio. ಪಾರ್ಟ್ನರ್ಗಳಿಗೆ ಇದನ್ನು ಹಂಚ್ಕೊಳ್ಳಿ. A loan directly to be taken to bank account. A is a partner, so A's loan is not an external liability. A loan should be taken to bank account. Then capital account of A and B to be taken as balance brought down in the capital account. Then cash to be taken as balance brought down in cash account. Next we have debtors 1,80,000 transferred to debit side of realization account. 9,000 reserve transferred to credit side of realization account. The accounting procedure says like this: 1,80,000 to be transferred to debit side of realization account and reserve to be transferred to credit side of realization account. Next we have BR transferred to debit side of realization account. Stock transferred to debit side of realization account. Machinery 60,000 transferred to debit side of realization account. They agreed to sell the business to a limited company and company to take over the assets and liabilities as follows. So machinery taken over at 48,000, stock taken over 1,05,000, debtor taken over 1,52,100, BR taken over 15,000, goodwill taken over 18,000. It means cash is not taken over by the company. The company agreed to take over creditors at 1,14,000, took over BP at 30,000. So both the liabilities are taken over by the company. So you need to calculate PC under net asset method. Under net asset method, we take assets taken over minus liabilities taken over. Out of PC, 1,20,000 is paid in the form of equity share. So first you need to calculate PC under net asset method. Out of PC, 1,20,000 of purchase price is paid in the form of equity share and balance is paid in the form of cash. You need to distribute the shares as per original capital ratio. The original capital is 90,000 and 60,000. So distribute the equity share in 9:6. Prepare ledger accounts in the books of the firm. Now how do you calculate PC under net asset method? Machinery taken over plus stock taken over plus debtors taken over plus BR taken over plus goodwill taken over less creditors taken over less BP taken over. So you get a PC of 1,94,100. Out of 1,94,100, 1,20,000 is paid in the form of shares. Then remaining 74,100 is paid in the form of cash. So realization account, first step, transfer all assets from the balance sheet to debit side of realization account. So debtor is transferred, BR is transferred, stock is transferred, machinery is transferred. Total asset transfer 3,86,100. Then as per accounting procedure, reserve needs to be transferred to credit side. Gross debtors to be taken to debit side. Reserves to be taken to credit side. Then transfer the liabilities, creditors and BP. So total liabilities transferred comes to 1,59,000. Then we write by purchasing company 1,94,100. This is in the form of PC. So thereby you get a realization loss 33,000. Distribute 33,000 to both the partners in profit sharing ratio. Now all partners capital account, first step, bring down the capital balance. So the capital balance is 90,000 and 60,000. So bring the capital balance from balance sheet to the capital account. Next you write by reserve fund. So distribute the RF in profit sharing ratio. So A gets 12,000, B gets 6,000. Then we have realization loss. Transfer the realization loss from credit side of realization account to debit side of capital account. Distribute the equity shares to partners in 3:2 as specified in the question. ಪ್ರಶ್ನೆಯಲ್ಲಿ ಹೇಳಿರೋ ಪ್ರಕಾರ ಶೇರ್ಸ್ ಅನ್ನು ಎ ಬಿಗೆ ಕ್ಯಾಪಿಟಲ್ ರೇಷಿಯೋದಲ್ಲಿ ಹಂಚ್ಕೊಳ್ಳಿ. ಕ್ಯಾಪಿಟಲ್ ರೇಷಿಯೋ ಇಸ್ 6:9. 6:9 ಅಂದರೆ 90,000 60,000 is a capital. So 9:6 ರೇಷಿಯೋದಲ್ಲಿ ಶೇರ್ಸ್ ಅನ್ನು ಹಂಚ್ಕೊಳ್ಳಿ. Distribute the equity share in capital ratio 9:6. If you simplify, you get 3:2. So the final capital balance to be settled to the partners is 5,250 for A and 9,750 for B. Now bank account, debit side we record receipts and credit side we record payments. Debit side, bring the bank balance to the debit side as to balance brought down. Then you write to purchase consideration 74,100, that is PC paid in the form of cash, and then A's loan to be paid 60,000 appearing in the balance sheet. So A loan first needs to be paid and then final capital balance of A and B settled. Thank you.